Hi members, this is Vinod from GrowWealth. This is the new version of Watchlist. I'm trying to use this video presentation to share my thoughts along with the charts and annotations to you from this week. I've had some technical issues, so hopefully this one works. I'd be really keen to hear your thoughts about how it went, whether it was useful or not, and whether you'd like to have this video version or just stick with the charts and words on the page itself. Okay, without further ado, let me start with the weekly performance from last week and then go to the list for the subsequent week. We had 5 stocks for last week: PGNY, MP, GOCO, TDOC, and Halo. Overall, the 5-stock watch list outperformed the market. We did 5.74% for the watch list, and the S&P 500 index returned 1.94%. All but GOCO or outperformed the S&P 500 index, whereas the TDOC is the top winner, top performers with 16.76% return last week. Let's look at the charts. So PGNY, as you might see, the last week had only 4 candles. That's because Monday was a holiday. It's Martin Luther King Jr. Day. So it was a holiday. Market opened on Tuesday. It gapped up, but it traded in the green zone, and that would have been a reasonable entry point. But it went up and then came down, which is quite normal for stocks to do, up and down. But it didn't break the pattern at all. It found support at 8-day moving average and then pushed up quite strongly with a bullish engulfing candle that engulfed the whole of the last week performance, which is quite a strong performance. The volume isn't great, but the price action continues to remain strong. If you have this in your portfolio, you could adjust the stop loss to just below the Friday's low, the pink zone. It's a nice setup, so I'm keeping this active in our watch list for the following week as well. The next one was MP. So this traded within the green zone last week, tried to go up, but then it didn't succeed. It came back with a bearish engulfing candle on Thursday, followed by a gap down below the 8-day moving average and finished with a doji candle. So the gap down below the 8-day moving average preceded by a doji and a bearish engulfing candle is not a great sign. So we have other good setups. So I would be looking to exit if this if you have this trade, and if it opens lower, then that is a confirmation that is going down. So if you have the stock, adjust the stop loss to this pink zone or just below the doji candle on Friday. Because of this action, I'm removing this from our watch list for the following week. The next one was TDOC. This has been in our watch list for 2 consecutive weeks, and it has acted really nicely. So last week, it traded in a sideways within this box, right? And it pulled out of this box with a high volume breakout bullish candle, and it broke above the 13th October high. And then it had a rest period on Thursday, followed by a really strong candle again on high volume, which then broke above the all-time high price. So this has acted really nicely, and the 2-week performance that it has been in our watch list has been fantastic. It did, even when it went sideways, it did not go below or close below the 8-day moving average, which is a good strong indicator. So I hope you had benefited from this particular stock, which is acting really nicely. And if you have, you can adjust the stop loss below the Thursday doji candle, or just which is also below the 8-day moving average, which has been acting as a support level for the stock. Because of the strong performance, I'm keeping this in my watch list for the next week. Halo. This chart is slightly similar to PGNY chart, where it traded in the green zone, pulled back, found support at 8-day moving average, and then had a strong bullish engulfing candle, but on a lower volume. The price action has been promising, so I'm keeping this in our watch list even for the next week. If you had bought it, you could adjust the stop loss because there is this sideways action, so just below the sideways action in this pink zone, where the support has been, so you can put the stop loss at this level. Next one is GoCo. It hasn't done much last week. It kind of returned about 0.13%. But the overall thesis, the long-term thesis, is still active. It hasn't closed below the 8-day moving average. In fact, it didn't even come close to the 21-day moving average, which it did last week. So the reasons why it is on the watch list still applies. So I'm keeping it in our watch list going forward to the next week as well. So 4 out of 5 stocks are being maintained in our watch list for next week, but I'm also adding 2 new stocks, TGT and NEO. TGT is Target. That's the big supermarket type company in US. This has been acting really nicely after the earnings gap in August, and has been continuously going in the upward direction with some minor pullbacks that gives new opportunities to buy. So it has done that in September, end of October, beginning November. Again in December, it kind of pulled back to the moving averages and then went up. It is doing the same again in January. So it broke above this kind of dotted line, and the light green big box is the 5% zone above the breakout, beyond which it's a bit too extended, and we shouldn't be chasing it because when it pulls back, it will end up in bigger loss for us. So 5% zone for position trading is a good point to find an entry. So it broke above that zone, but came back and found the 21-day moving average as support and had a pin bar or a doji candle, and then moved above that zone to the about the 8-day moving average now. So this is acting really nicely, good strong chart, and recent actions has been encouraging. So this would be something I'll be watching and add it to the watch list with green and red zones as potential stop entry points and stop loss guidance. The next one is NIO. A lot of you know about NIO, the electric car manufacturer in China. So this has had a tremendous run in the last many months. And this was in our watch list 2 weeks ago, where I said, don't chase beyond 60, as you can see here in the last week, but it gapped open around 63, 62, 63 level. And that's a bit too big a jump, so we shouldn't be chasing that. But it came back to this previous breakout level and found some support there and is going back again. So when it came back, that would have been a great entry point because the risk-reward ratio would have been favorable. So it's going up again. It's acting really nicely. So this might give a good entry for near future as well, because I believe that this is setting up a continuation pattern where the uptrend that it has had recently will be resumed quite soon, depending on the price action, if it is confirmed in the next day or two. So the pink zones could be the new stop loss region, and if it acts really positively in the next few days, that will be a good entry point. So that is it for this week's watch list. The new watch list are PGNY, TDOC, GoCo, Halo, all of them from previous watch lists. And the new stocks added to this week's are TGT and NEO. Hope it was helpful. Happy learning, successful investing, and I see you soon in our next interaction.